Hello, everyone. Welcome to our second Diamond Debates LinkedIn Live. And we're going to be talking about rough diamonds and the dealer market and what's happened, how the dealer market has been affected by all the very many changes that have occurred in the industry over the last number of years. And we are very happy to have Didier Backaert, who is the director of Bonas Group, which is a rough tender house among many other things and brokerage firm. Didier, you can correct me on my descriptions, but thank you so much for joining us for today's debate.
My pleasure.
And so the topic that we're exploring is diamond dealers are losing their relevance. And that's specifically, they're dealers in the rough market and they're dealers in the polished market. But our focus today, I think, will be on the rough segment. And as always, our debate today was brought to you by Sarin Technologies. For over 35 years, Sarin has asked the industry's big questions, providing advanced AI technology to drive the diamond sector forward. Imagining a more efficient and more innovative industry is central to Sarin's DNA and essential to long-term growth across the entire diamond ecosystem. So thank you to Sarin for supporting these discussions. And so I guess let's dive right into it. I mean, Didier, I think it's a topic that I've been thinking about for a long time, and the landscape certainly has changed. But what is your feeling? Are diamond dealers, have they lost their relevance?
Sorry, I lost you for a second. My apologies. The system seems to be glitching a bit.
Oh, okay. Well, welcome back. I was posing the question that's the subject of our topic. Are diamond dealers still relevant in today's market, in the rough market?
In my opinion, they are still very relevant. I think that the role of a dealer has changed over the years, obviously over the decades. But we still interact a lot with dealers from our side as well. We believe they are important, so in my opinion, they might have changed in terms of how they do things in the industry, but for us, dealers remain quite important part of the pipeline.
Well, I mean, the way I look at the market and the way I would report on the market is that, around the De Beers site, let's say, and, historically speaking, we would always talk about the secondary market as being an indicator of what's happening really in the industry. And so the secondary market would refer to goods that were sold at the site and then came into the broader trading environment.
Mm-hmm.
And that just doesn't seem to be an issue that I'm reporting on, that people are talking about anymore. So to my mind, that signals a diminishing of the dealer, the role of the dealer, or the way rough diamonds are traded.
Well, I think maybe from a De Beers point of view, obviously, they still have a dealer model as well for the moment. So they both basically have both manufacturers and dealers as site holders. Having said that, obviously, there's much fewer dealers nowadays than there were in the past. I think De Beers is mostly selling into manufacturing contracts nowadays. However, as I said, I think that the role of a dealer has changed. I think the dealers from nowadays are not the dealers that used to be there, just trading boxes. I think to that extent, yes, I agree with you. However, I think there's still a lot of dealers on the market that add value to the pipeline as well. Mostly, maybe not so much, really splitting up, larger productions into smaller productions or in smaller assortments and then selling it onto the market. But obviously, you still have dealers, bringing certain productions from other countries into certain markets and then either, selling it maybe through a tender house, selling parts of it themselves. So I think the role has changed, but I think they're still pretty much there and remain quite important, in my opinion. A lot of them also nowadays, I think, have turned into more into the financing side rather than just really splitting up and making custom-made assortments. I think they do finance a lot as well.
Okay, well, maybe we'll get back to that point, but I mean, you bring up the tender houses, and that was another reason why I look at the goods that are sold as a trading sort of through a trading platform or channel. My mind immediately goes to the tender houses, and Bonas is one that has many tenders and auctions that are on the go this week even, and so have to my mind, the tender houses seem to have taken over that role in a way of distribution, distributing the non-contract supplied rough to the market.
I think to some extent, yes. I mean, I think we might be doing similar things to what the dealers used to be doing. Obviously, what we do at Bonas is mostly for junior mining companies. We're not doing this for everyone. We're not doing it for the larger ones. We're not doing it for, say, the SMEs. I mean, basically the smaller sized alluvial mining companies. So I think there's still a role to be played for traders over there. But yes, I mean, to a certain extent, we do some of the activities which the traders used to be doing in the past. However, I mean, I think there's still, I mean, to a certain extent, we both play similar but also different roles in the industry, I believe.
Well, how do they differ? I mean,
for instance, I think a lot of the traders, what did they traditionally do? They basically broke larger, let's say, productions into smaller assortments, brought them to the markets, and to then also finance the market with what they sold. So it was either being sold cash or on terms. I think obviously that is something we don't do. We don't offer credit to the markets. I think that's where the dealers still remain important. Some goods, having them going through their hands, and then therefore bringing them to smaller players in the industry, be it in Surat or in Gujarat. And offer them some financing over there.
Okay, I mean you kind of seem to be emphasizing the financing role of that sort of traditional dealer, rough dealer in that's and so is that a big change, or were the traditional dealer site holders who would sort of buy boxes and then bring them to the secondary market, was there always like a financing role that they would play? My impression was that was just a matter of supplying the broader, the smaller players in the market who didn't have access to De Beers or other goods.
I think it was a combination of. Obviously, certain traders, would have sold their boxes cash. Some others, would have offered finance. I think it also depends on the type of goods that were sold. If you look at, let's say, the rejections or the near-gem material, shall I say, I think, there were traditionally, dealers over there that would actually split up the goods further, make tailor-made assortments. And sell those goods, basically almost drip feed them, to small players, niche players in India, and making sure, that these people had the goods they wanted, exactly the goods that they wanted, and also finance these people. I think both models existed. I think, dealers have, some of the dealers have always been financing part of the market as well. But I guess, there were different types of dealers in the days as well. But I think some of them still remain very important. Just as, the ones I've just been mentioning, near gems. If you sell near gems into India, not everyone can use full boxes or, full assortments. They can only use parts of it. And I think that role is not to be underestimated.
Okay. That's another thing you don't actually hear so much in the industry conversation is the level of bank financing was a big topic 10 years ago, and we would try and track that, but it's a non-event. It's not an issue that we talk about anymore, and maybe that's because the industry is more maybe healthier, frankly, and able to self-finance its rough purchases. But then it seems again that the bigger companies are providing that financing mechanism to the smaller players who would previously have relied on the banks. I don't know.
No, I think absolutely. I think you're right. I think it is an important role of these companies to basically finance smaller players. I do agree with you that the industry is actually quite healthy from a financial point of view. I think that companies have learned, over the last probably 2 decades. We've seen lots of ups and downs, and I think companies have become slightly more mature in the way they operate and understand, that there's upsides and downsides, ups and downs, and therefore, I think companies are behaving much more in a much more healthy way than they used maybe 20 years ago.
Right. So the other thing that sort of sparked my interest in this topic was when I think back to when I started in the industry, which was 2007. And I don't know if this was your impression, but someone told me that a rough diamond, changes hands at least five to 10 times before it, on average, before it reaches the cutting wheel. And maybe that was a bit exaggerated, I don't know, but it was certainly the case where there was an exchange of ownership along the way to the cutting wheel. And it doesn't seem that that's the case anymore. Again, and because that change of that trading element seems to have eroded away as the industry has become more efficient. So I mean, again, the role of the dealer then is not necessarily just to flip the boxes. It seems to be more arranging assortments and finding the right according to the needs of their client that's already in place, right?
Yeah, no, I think the industry has become much more streamlined, I agree, and much more efficient. And I do think that diamonds will pass through fewer hands before they reach, the end consumer nowadays. But like you said, I think that, coming back to the dealers, I think they partly had to reinvent themselves and have tried to add value there where, there is value to be added. If it's, financing from the moment, if it is, depending on the type of goods they're in, to create niche assortments and then sell those niche assortments, to, let's say, smaller companies. I say in India, it could be anywhere, but I mean, obviously, mostly India. I think, that's what these dealers will be doing. I think they will always try and find ways to add value and create and generate revenue for their own companies as well.
Right. I mean, back to that financing element, it seems, again, like the difference is that if you're providing financing and along with the supply, that supply is almost like pre-ordered. And so it's for the specific client that you have already in place as a dealer. Whereas before, you would just sort of blindly put the goods on the market and it would be available as a trading environment. And so, is that am I understanding your sort of scenario correctly?
No, I think that's accurate. I think you're right in the sense that I think there's much less of just putting goods on the market and wait for someone to show up. I think it is clear that you probably have already an end client in mind. When you buy certain goods, and that if you make that particular assortment, it might be suiting one of your clients, niche clients, that might want to get those particular diamonds. So I agree with you. I think there is. So the role has changed. There's no doubt. But I would probably think that, the dealers have reinvented themselves. And yes, they're not what they used to be 20 years ago, like you said. But I think they found their way, and I think they remain an integral part, an important part of our industry.
Right. So then, what's the role of like the trading centers like Antwerp, Dubai now? Is those are the two major rough trading centers. Is it fair to call them trading centers, or are they just locations where many tenders take place? You know?
I would think that we're part of a larger environment, and therefore it's not just tender centers. I think it is really trading centers. But like I said, obviously, the tenders have gained in importance. I don't think anyone can deny that.
Yeah.
It has become a way of selling, certain productions and bring them to the markets. Where obviously, the tender house, would make assortments which we believe are optimal for the clients that will be buying from the tenders, because that's the way you can optimize value also for the mining companies. So it's basically what we try to establish is a win-win, where obviously clients will have as least byproduct as possible, and therefore will be able to pay the optimal price for the goods they get on the table.
Right.
But
Okay. But okay, and I mean, you kind of feel the influence of the tender circuit more than you used to, and I think that speaks to a general democratization, let's say, of production and rough supply. So whereas before, historically, De Beers was sort of the main channel, and then El Rosa came along and became a sort of a similar size in terms of volume, and then I think the tender houses had a big role to play in disrupting that sort of two-channel system. Now you have Okavango Diamond Company coming along with an increase in supply, and Angola selling more. And so actually you would think that that would make, broaden the pie in terms of access to diamonds for a broader range of companies, including dealers. You would think that encourages trading, but it doesn't. To my mind, it doesn't seem to be the case. Maybe they're all just following that same sort of contract model, where, apart from the tender houses, but it's still similarly, playing into the bigger players who are able to bid on the goods, and with the end manufacturing channel in mind.
No,
So
I tend to agree with you. Look, I think at the end of the day, I mean, whether it's a tender house or whether it's a mining company, using either a tender or an auction model, I mean, I think that's what it is something that obviously has changed over the last 2 decades, I would say. I think companies have realized that it's not only about contract sales, where you have a price, and you're trying to have a whole range of clients willing to buy into that price. I think that's where I think many mining companies have discovered that using either a tender or an auction mechanism can help you optimize prices for your productions. So I think that is something that has changed. It was always there. I mean, I think a lot of the mining companies, even in the days, except for the Bears, were using either tenders or auctions. I mean, even for the Bears, DBAS has always been around as well. Or Diamdel in the days. I mean, so there was always a model, where obviously they were trying to do some and trying to understand the price of the market, shall I say it, and then hopefully use that as a pricing mechanism and a tool to show where the market was in terms of pricing. So I think it's always been there. I think the only difference is that I think it's been, like you said, used more often. I think junior mining companies who did not see the value of setting up their own sales channels thought that that working through tender houses or auction houses, whatever we'll call them, might help them. I think that's what we've been seeing over the last 10, 15 years now.
Yeah, I'm a little surprised at the sort of trend toward contract sales. Okavango's taking on their, a contract model, and obviously De Beers still has a big emphasis on their sites, and it feels, especially in the market environment, which feels like a bit of a new norm, in terms of the challenges that the industry faces, that that you that the that you can optimize rough value better in the auction or tender circuit.
Well, I think there's still I think it also depends on the size of your production. I still do believe, that as long as your production is big enough, you can either pick and choose. You could have, a dual system where you work with, let's say, tender or auctions, but you still work with fixed contracts where you can offset certain volumes at certain prices. I believe there's value for both. Obviously, for contract sales, you need to set up different structure in terms of organization. You'll have to have your own sales channel in place, work consistency or goods consistency, work on pricing mechanisms, etc., etc. Have contracts in place, which obviously is slightly more onerous, but without any doubt brings value, in my opinion, to those companies as well. As long as you know where your prices are, which obviously they are establishing, with potentially, having a view on the market, on what is happening. And well, I mean, it's been working for a long time, and I do believe there is value in having contract sales in place if you're large enough to be able to actually set it up as a system.
Or on the other hand, is if you have large production, like a 20 million carat per year sort of production footprint, that it's too much for an auction platform to handle.
Yes, I think that's also part of the reason why. I mean, obviously, these larger mining companies will not put everything through an auction or a tender mechanism. It's exactly for that. I mean, it becomes really onerous, to put everything through that mechanism. And therefore, to be able to have predictability on what you can sell, I mean, to have contract sales in place makes sense as well.
Can I ask you a technical question? Like, what's the difference between a tender and an auction? Are you able to clarify
a tender system is actually quite easy. It's a system where a company would set a price, a static price, as the highest bid is willing to put on goods. You put it into the tender platform, and then the highest bid will win that lot. Whereas with an auction, you basically go against one another in different rounds.
Right.
You basically have a more dynamic system to establish the winning price.
With auctions, you see the other bids.
You might see the other bids. What you know is that you are willing to continue to the next round by placing an increment. And then depending on the mining company, you will see how many competitors there are still, et cetera, et cetera. But I mean, there's different variables that can be set in place during an auction system.
Okay, thank you. I need to memorize that, because I've asked that question before and I always get a little confused, and I always get a little tongue-tied in when and where and with whom to refer to a tender or an auction. But it seems that
many people make the mistake, Avi. It's not just you. I think many people actually mix up tenders with auctions. They all mean the same, but it's not exactly the same. It's just a different way of setting the winning price.
Right, but it seems the majority of the majority is tender, although I think De Beers is an auction, right?
It's mixed. I think it's really mixed. I mean, it really depends on what people prefer as a mining company. I think there's arguments for both. It really depends on preferences of both the mining company as well as, the, let's say, tender house or auction house in that instance. Yeah.
Okay. There is one other aspect in terms of the dealer market that influenced my thinking that dealers are struggling for their place in the market, and that is the level of production, the volume of goods that are coming onto the market. With each global crisis that we face, it seems that production levels set lower normals. So we saw the financial crisis, there was a drop. So over COVID again, there was another drop, and now in the last 2 years, we've seen another decline in global production levels. And I'm just wondering if that again sort of speaks to it's forcing the industry into a more efficient sort of distribution of rough goods.
Well, I think some of the mines have matured, so there's no doubt. I mean, some new mines have come into play as well, specifically in Angola, I think. But yes, I mean, I think globally speaking, I think production levels are coming down slightly. Not sure whether there's a link between traders and having fewer goods. I think the industry has forced itself to become more efficient as well. I think that's the way the industry has been operating. People have been fighting for margins, therefore had to become more efficient. I believe that, as I said before, the trader from 20 years ago is not a trader from today. Having said that, I don't think these people have just let themselves being pushed away. I think they just try to reinvent themselves as well. I think the industry is shrinking. I think there's no doubt there's consolidation taking place. But I think it's taking place both at a manufacturing level as well as in trading levels, trader activity.
I think it's happening across the board, from retail through to
Exactly.
through to the mining segment, and that'll be a subject of another debate that we'll have at a later stage. But it does obviously, affect. And I think it's an interesting question on the polished market as well. What is the role of the polished dealer? Because you have you certainly have a vertical integration of, particularly amongst manufacturers who, have access to your mom and pop retailer in the Midwest. And that they don't necessarily need that middle or as many middlemen for sure as they used to. So it's it's across the board. But I think our area for today is that rough market, and I think it's especially as the margins have been so tight and profitability such a challenge for miners, that it's understandable that there is a squeezing out of certain players in the rough industry.
Survival of the fittest. I think at any level, I think you have to make sure that you stay relevant. Therefore, I'm sure that some of the traders will have disappeared, such as probably some of the manufacturers as well. Retailers have disappeared. I think it's really a matter of making sure that you keep on reinventing yourself in a increasingly challenging environment throughout the value chain.
Yeah, well, it's interesting. I think that you're seeing to what you're alluding to, that some of the big manufacturers in India are playing a different role. It's not necessarily of turning rough into polished, but it's to distribute rough and provide the financing for that rough supply. And I guess they're making some money off their interest, along with any premium that they might resell that rough for. Is that a fair summation of
well,
what
it's
you're
not always
alluding to?
manufacturers. Manufacturers might be selling some of their byproduct into the market, but definitely players in the value chain, that will play that role. That might have been, for argument's sake, you might have people that were good at manufacturing 10, 15 years ago, decided, that they don't play as an important role anymore, but have capital, know the industry, and therefore have decided, to play an intermediate role by, financing some of these smaller players. So, I think it's an ever-evolving world.
Yeah, I wonder if they have a role to play in the polished distribution on behalf of those companies, though, because
I think especially, in the near-gem area, there might be some polished buyback taking place as well, where you'll be selling your rough and then buy some polished back from these players. Again, it's multiple business models. I think some of it might be used by the companies themselves. As a service, you might be willing to buy some of the polished back from these people. I think there's multiple roles and multiple things to be done throughout, the value chain here.
Okay, well, it's something I'm watching, and I accept your argument that they have that they add value. There is value to be added among those sort of dealers. I think although their role has changed and the way they're finding value
Yes.
has changed, and certainly not what it was
10
years ago at least. I'll be interested to see what De Beers does with their sightholder categories in moving forward. If they'll still have this sort of dealer model, they've already diminished it to some extent. but it'll be interesting to watch if the same is true, 5 years down the line, if there is still this that segment of the rough market that has a role to play in adding value. I have my doubts personally.
Let's see. Let's have that discussion in 5 years from now. We can have another debate on this if you want.
It's a date. Well, thanks so much, Didier. You put a lot of insights and enlightened me, certainly, in certain aspects of this that I didn't know. I'm sure the same is true for our audience. Once again, I'm still new to the technical stuff, so I certainly hope this was streaming. If not, it was recorded, and we will post it afterwards on LinkedIn, on YouTube, etc., on my podcast channel. So look out for that. But thank you so much, Didier, and Merry Christmas. Have a happy holidays to you and your family. Antwerp's shutting down now, I believe. So enjoy the break.
Thank you very much. Same to you, Javi. Thank you.
Okay, and thanks everyone for watching. Okay.